I think the likelihood of gold going into the mid-1300s is much more probable at this point than going anywhere like sub-1200, for example. You know, don't forget that gold started the year at 1202. It was virtually hated by everyone in the hedge fund community, obviously because the price of gold had collapsed for the prior 2.5 years. So there's a lot of baggage there. There was a lot of emotion associated with being bearish on gold at the lows. Again, at the beginning of the year's lows, and then you had a big move to the upside. I think that drew a lot of people in, and just the expediency of the move, I think, was frustrating to a lot of people when it started to correct. So here you are, and you got to have a level. You have to also have a point of view, and I think that finally we have that causal factor that at least I've been looking for, which is the Federal Reserve getting easier on the margin. And that's what gets people excited about gold. Two things. The Fed being wrong on growth, and then the Fed starting to guide down interest rates or get more dovish on the margin. So again, as the Fed gets more dovish on the margin, and we do think that they will throughout July and August, and into Jackson Hole, and then into the September Fed meeting, I think that gold, if it breaks out above 1336, for example, which in our model is a big breakout line, that puts 1380 in play in fairly short order. So that's what I've been looking for from here, is gold to trade into the mid-1300s and test its year-to-date highs.